Good evening, traders. It is Wednesday, February 26th, after the market close, and that must mean that it's time for our weekly swing trading video. Man, what a week! Holy cow! From the time that I did this video a week ago, we were at an all-time high right here on the market. This is where the last video came out on February 19th, and here's what's happened ever since. S&P 500 down 300 points. This huge waterfall event. Very, very nasty week, but we came out of this with flying colors. We're going to go through the trades in a little bit here. I'm going to have a little bit of housekeeping to do. I do want to mention to you that I'm going to have two versions of Option Stalker. One will be Option Stalker for swing traders. One will be Option Stalker Pro. I'll be releasing that in the next 3 weeks or so. I'm going to be using Option Stalker for swing traders. It will be half the price of Option Stalker Pro. So what's the difference? This version will be really well suited for people who do end of day analysis and analysis over the weekend. Does that mean that it won't have intraday charts? No, you'll have all that stuff. You just won't have some of the day trading searches that we use. You also won't have all the different search criteria in the custom search table. You can see here the shorter time frames are blocked out, but you still have these time frames and everything below that you'll be able to search for. So those are two differences. You won't have the 10P indicator that we use for day trading the S&P 500. You won't see it down here in the lower tray, and you won't have access to the chat room, which really, again, is intended for day traders. But you'll have access to everything else, and it'll be super easy for you to still run all the searches that you need to do. And most importantly, you'll have the Wednesday night video. And I'm going to be adding a really cool table in Option Stalker, and I'll have all the spreads already loaded so that with one click, you can enter them with your brokerage firm. I'm going to make them so that they don't execute. They can't execute. There's no way for you to get filled, and it'll be for one contract. But the next day, you'll be able to view them on your mobile app that your brokerage firm provides, see the spreads, adjust the quantity, monitor the stock, adjust the price, and route it very quickly. You won't be fumbling around trying to look for strike prices and option chains and expiration dates and click this one to sell and click that one to buy. Is this the credit you want? You won't have to deal with anything. You'll just have to adjust the credit, adjust the quantity, look at the stock, route the trade. So I'm doing this to make it super, super easy to take advantage of these videos. I got some great trades lined up. I've also got just a lot of analysis that we're going to be doing because the market's throwing everyone a curveball. Fortunately, we are in cash. So before we get going, I'd like to do some housekeeping. Bulletins, they're posted in Option Stalker every day. So if I click bulletin up here, you'll see it come up. Every time you log in, you're going to see a pop-up because I post my daily comments here every day, and I also post my videos. So I'm counting on you to come in after the close when you're at home. Just check it for 1 minute. See if there's anything important going on in the platform and in the bulletins. So last week, if you came in, you would have seen my morning comments Thursday morning. All systems go. We got our spreads ready to go. Then, about an hour and a half into the open, hold off on bullish spreads, on bullish put spreads. Don't do your bullish put spreads. If you have bullish put spreads on that are winners, buy them back. Buy VXX for protection. So this is 2 hours into the open on Thursday. Right in here. Man, did that end up being a great trade. So let's say that you missed all of that and you logged in maybe Friday morning. If you logged in Friday morning for your market comments, you're going to see here as you scroll down into the comments for swing traders, hey, we dodged a bullet. We bought all of our bullish put spreads back. We bought some VXX, yada, yada, yada. We bought in our Disney spread. Actually, the only trade that we were able to get in to was Disney. I tried to get into all the spreads. They all ran higher on us in the first 2 hours of trading. Couldn't get any of them off until the market really sold off hard. So Disney has said, hey, let's get out of this thing right now. Take your loss. We legged out of it for a loss. And we did have two other spreads on. We had a win bullish put spread and we had a bullish put spread on CI, Cigna, and those are from a couple of weeks ago. So we took a loss on that. But if you held long on the VXX, you did just fine because we had limited or finite risk on our bullish put spreads, but we had unlimited upside potential on VXX. It went from 1350, today it was all the way up to 19 and change. So really big gain here, and that's the whole intent of a hedge, is that it makes money when your other positions are losing money. So all told, we really dodged a big bullet to have the S&P 500 down 300 points in the last week, and we came out of this unscathed. Now, we've been milking this for the last 5 months and just piling in the cash week in and week out. We've had a great run. I want to make sure that we're taking it very easy in here. This is not a time to be bold. This is not a time that there are just fantastic trading opportunities going to happen. I don't know what the market's going to do. We broke through the 100-day moving average. My suspicion and the basis for all of our trades that we're going to be doing this week is that the market is going to test the 200-day moving average. That means that we've got probably another 100 points or so, figuring that we break through it and then maybe rally above it. We've got about another 100 S&P points that the market can fall in the course of the next few days. Now, if it does that, we're going to be filled on some of our bullish put spreads. But I'm not going overboard. We're not doing a bunch of them. The market's going to have to come in, and it's going to have to come in hard for us to get filled on these. I believe the S&P 500 is down about 16 points right now after hours, so we are going to see a little bit of softness. We will take out the low of the day today. I think that 200-day moving average is a magnet. So as the market comes in, I'm looking for really, really good companies. I'm looking for companies that should not be impacted very much by the coronavirus. And I'm also going to be keeping our bullish put spreads very tight, meaning I want them to expire on March 6th. And if we get that big market drop, you would be amazed at how out of whack the prices can get intraday. And I'm looking for that. We want that. We want there to be panic for a little bit until we hit that 200-day moving average. And then when it bounces back, we'll get filled on our spreads. And then we'll be sitting pretty because I've sold them below technical support. The stocks that I've picked this week also have nice relative strength. So before we do that, let's go take a look at what we had on deck last week. Now, again, mind you, first of all, before I do that, let me go into a 5-minute chart. I'm going to have to do a little bit of scrolling back, but I'm going to show you the tell that we had on February 20th and how all of this got started and when I knew that the market was going to be in trouble and why I pulled the plug on everything. So we came into the trading day and everything seemed to be just fine. This is when the video came out. The market had closed down a little bit off of an all-time high, almost up to 340 on the SPY. And we had a little softness into the close. No big deal. Market gapped down a little bit. We've seen that as well. And then we had a nice rally up and everything looked good in here. And then I noticed typically you get the gap down, market rallies up, take out the high from the prior day, keep on going. But I noticed these two long red candles right away, and I posted that in the chat room, and I said, this was a smackdown off of that high. I don't think we're going anywhere. We're certainly not going to challenge the prior day's high. And so we had a nice upward sloping trend line here. We also had the 10P indicator starting to cross. It had really spiked. It was starting to roll over. So we had a number of things playing in our favor. And as soon as I saw this bar right here, this long red candle that easily took out the low of the day, I said, oh, folks, we are going down. And we had already bought puts up here in the chat room, so we were in great position. Man, I had a double buying some SPY puts that expired in 8 days. And usually you're not going to get a double on SPY puts in a matter of an hour, but it was really nice. We had that waterfall event. But during the process of it, so this is where the market starts to fall apart, right in here. This is when I posted, hey, if you didn't get any of these bullish put spreads done, don't do them. Don't do these spreads. And then I posted again about in here and said, buy in your bullish put spreads if you've got profits. We had, I think, 6 bullish put spreads that were trading for pennies that expired the next day. All of them did expire the next day, but you should have bought those back for pennies when we had this type of market drop. So please make sure you come in and check the bulletins in the platform. If I see something that's really, really important, I'm going to post it, and it'll be as big as you can possibly imagine right in the middle of the screen. You can't miss it. So the market recovers, everything looks good. I'm still very suspicious, and then the rest is history because we start seeing big selling. We take out the low easily from Thursday, and then the market just starts to really, really sell off. And we've seen heavy selling on Fridays the last 4 weeks, and we get a bounce on Monday. Okay, well, big sell off on Monday, but that's okay. That's been typical. Mondays typically bounce. And so here we go. Here's this nice looking bounce. Not so fast. Typically, we come right in here and keep going, going, going. Not this time. We started to roll over, and this simply confirmed the fact that the market wanted to go lower. Monday did not bounce. Going to go back to the daily chart. Now we know the rest of the story. Really, really heavy selling. Part of the magnitude of this drop was related to the fact that there were so many bullish speculators. I've been mentioning this, gosh, since back in here when the upper trend lines for the channel were starting to get breached on the upside. I said, folks, this usually when you start seeing a pullback in here, I thought this might be it right in here, but no. Put buyers took some losses right in here. Get short this strong, strong rally. Here we go. Here we go. Nope. Going to rally right up to a new all-time high. But now there's panic. And we're starting to see a lot of people bail out of positions. I'm sure that some investors are reconsidering. Maybe I need to take some profits after a massive 3-year run of 50% gain. Take a little money off the table. Certainly could see that type of mentality, especially with the coronavirus spreading. I don't know how bad it's going to get. I don't know what the economic impact is going to be. I don't know if it's going to mutate. There's a lot of unknowns right now. I don't know if this is going to cause a credit crisis. It certainly could when you shut the whole economy down for 2 months and you've got cash flow dependent companies like airlines that still have a lot of fixed overhead. There's going to be a lot of hurt. I don't know what's going to happen. So we need to be very, very cautious. We bailed. We did great. We went to cash. We rode this thing for everything it had. And now we get to sit back and watch how things play out. We're going to have more clarity. The dust is going to settle. And that's when we're going to really have good opportunities. That time is not now. We're going to be waiting for that 200-day moving average to be tested. I hope it's tomorrow. I hope it happens in a dramatic way. I hope we get a nice intraday reversal off that 200-day moving average because then we will be filled on our spreads on the way down and we'll have some cushion when it bounces back. And hopefully the prices will get all whacked out so we can get some really good fills on some of the stocks that I have on deck. So let's take a look, see what we've got last week. So I had 2 lists. I had 6 bullish put spreads and 5 bearish call spreads. Folks, you know I haven't had that kind of mix of bearish call spreads. So even before I did the video right here on Wednesday night, market at an all-time high, all of a sudden Pete out of nowhere decides he's got to do 5 bearish call spreads. I've only done JPM previous to that, and I'd done 2 bearish call spreads the week before that in the last 5 months. That's it. So I could start to see the signs, and I was also seeing a lot of opportunities selling bearish call spreads. The patterns were just setting up right. Now I always look at bullish trades and I look at bearish trades, and that helps me keep very in tune with what's going on and to see both sides of the market and not to get tunnel vision. I'd encourage all of you to make sure that you always do that. Well, as I started going through some of my bearish searches, I went, wow, that one looks really good. That one looks really good too. That one looks great too. The market's still strong and it's going higher, but there's some really good opportunities here. I think I'm going to do these trades anyway because they should make money just like the bullish put spreads. So we had a balanced portfolio of longs and shorts. So the warning signs were already starting to surface. Let's take a look at the bearish put spreads first. And IBM I had put on the list. I told you that back here when the CEO retired, the stock shot higher for no reason. Nothing had been done. The company didn't have a new product, no revenue growth or anything that changed in the last 5 days, but the stock rallied like this. I figured that it would start to decline. This is a really nice bearish call spread for us. I'm a genius. J&J. Oh, look at that selling. Genius. Roku. Selling. Genius. Snap. Genius. TSN. Genius. Actually, TSN, I did get that uh, bearish call spread off. That was one of the only bearish call spreads I could get off because the rest of them, this was actually a bearish call spread. The rest of them had already rallied, so we weren't able to get those trades off. And let's take a look at the bullish put spreads from February 19th. BSX was on the list. Ouch. Idiot. Disney. Idiot. EXPE. Yow. Super bad. Facebook. Nasty. Grub. Grub actually held in there pretty well. And I don't recall how far we had gone, but I think we were right on that 100-day moving average. So not the end of the world. TLR actually did okay. So I think that if there's a huge coronavirus epidemic, who knows? Maybe people will be smoking more pot. I don't know. But the stock is on major technical support. So this one actually has been grinding down, but let's call that a loser too. The point is, didn't matter really what stocks you were in or how much protection you had. Once the market broke down, especially with a 300-point S&P 500 drop, there is no safe haven. Everything is going to get nailed. So the baby's going to get thrown out with the bathwater. That's kind of what we're looking for today. We're looking for stocks that have taken a big hit, but don't necessarily have exposure to coronavirus if it spreads. So dodged a bullet, and that's okay. That's part of trading, is knowing when to fold your cards and when to walk away. So we were able to do that. So I'm going to go into the list here, and I've got two lists today. I've got the February 26th list. We're going to be doing all bullish put spreads. What the heck is wrong with you, Pete? Didn't you see the market sell off this week? My God, why would we want to be doing anything that has a bullish twist to it? I think this sell-off is way overdone. I think that there's a little bit too much excitement. I think that we're going to see some buying come in the course of the next week or so. I want to sell bullish put spreads into what will probably be the final leg of this sell-off for a little bit. So first on the list, Microsoft. So why do we like Microsoft? Well, Microsoft actually has held up pretty well. We did have this sell-off right here. You can see that the stock basically went from about 186 down to about 170, let's call it. So we had about a 15-point drop in the stock. And if I take a look at where Microsoft would have to be to get down to the 100-day moving average, it's about 156. So it would be about an equal drop from here to get down to the 100-day moving average. I would love to hang out on that 100-day moving average, and I would snap at the chance to buy Microsoft right here. Microsoft is a software company. I don't think they're going to have a lot of exposure to coronavirus. I don't know that they have that many parts that they manufacture in China. So I'd love to be able to buy it down here. You can also see this long hammer here off of that drop. The market today tested the low, and it actually closed a little bit below the prior day low. Look at Microsoft. It's nowhere near that low, not even close. So that 162 level is going to provide for support. So what we're going to be doing is we're going to be looking at March 6th options. So we have a week and 2 days that we need to get through this trade. So we're going to click on March 6th and we're going to go in and we're going to take a look at those 155 puts and we're going to click on the 152.50 puts and we're going to see off screen right now that is 6 cents bid offered at 38 cents. What the heck? This is Microsoft. This usually has super tight bid-ask spreads. It's one of the most liquid options in the country. And it's got a market like that. That's what happens when you get these big market declines is the bid-ask spreads on options widen out. Typically, you don't want to be trading in that type of environment, but that actually can play to our advantage if we are looking for a pretty big credit on this and we can wait for those prices to get whacked out. So what we're going to be doing is we're going to be selling this bullish put spread, and you should already know that if I've got $2.50 between the strike prices, I'm going to be looking to get 50 cents for this. So, well, gee, Pete, it's not there right now. Look, see, it's only 6 cents bid offered at 38 cents. How are we going to get filled on that? We're not going to get filled on that. We need that market pullback. We're trying to be super cautious. If they want to give us a freebie, fine. We'll have an order working out there, and we will try to sell that bullish put spread for 50 cents. Now, let me put another caveat on all of these orders, and this is very important. We have a week and 2 days left until expiration. We need to get the spread on tomorrow or Friday. If we do not get the spread on Thursday or Friday, all orders this week are canceled, period. Because it means that if we get filled Monday or Tuesday, that the markets really come in hard and that we've got a lot of exposure because time decay should have been working for us over the weekend, and now we're only getting filled. That means that we'd have to be much closer to the money and not a good risk reward scenario. What I want to do is my scenario is weakness tomorrow in the market, we get filled, market bounces off the 200-day moving average and holds its own for a week and 2 days. I think that's a great scenario for us. I'd love to be able to put that bullish put spread on below that 100-day moving average on Microsoft with a week and 2 days left till expiration. That would generate a 25% return for us. Yes, that type of risk reward, I'm good with. I'd take that trade in a heartbeat. So that's our first trade. Sell the MSFT March 155 put, buy the MSFT March 6 152.50 put. Do that for a credit of 50 cents. If you are a day trader and you are watching the market and the scenario that I showed you plays out and you can only get 45 cents and the market bounces, of course, that's different. You're a day trader. If you're a swing trader and you can't watch the market, you don't need to be playing that game. Err on the side of caution. Do nothing. So, NVIDIA, beautiful. Nice grind higher. Big demand for graphics chips. They're going to be putting them in cars, phones, everything. Tons of applications for NVIDIA. Very hot stock. Boom, boom, earnings. We love it. We love it. Off to the races. Going to go to the moon. Uh-oh. That coronavirus thing. Sell. But the stock has still been able to hold this breakout at 255, which is nice. That's good. Comes back and checks that breakout. Boy, if I would have told you in here after earnings, hey, would anybody buy this breakout on NVIDIA in the next week if you had a chance to? I think every hand would go up and say, oh gosh, absolutely, yeah, sign me up. For sure, absolutely. Well, we're not going to try and buy the stock here. We're going to try and get in down on that 100-day moving average, which is also horizontal support right there at about the, let's call it 230, 250 level. Well, this is actually at 227.50, the 100-day moving average. So let's put up our options. You're going to think I'm nuts with some of these credits that we're looking for. Trust me, prices get way, way, way out of whack when you've got a market decline. And if we go down and test that 200-day moving average, you're going to see some real panic selling. And then you're going to see a snapback rally. 1 minute, you're going to be wringing your hands. And by the end of the day, you'll probably be happy that you stood your ground and took the trade. So the 227.50 puts, March 6th expiration. Make sure I'm in the right one. Yep, March 6th expiration. So click on that bid. Selling those, we're buying these, the 225s. You can see that the bid-ask spread on that is currently 8 cents bid, offered at 22 cents. Nowhere near the 50 cents we need. No problem. We're going to try anyway. So this order is to sell the NVDA March 6, 227.50 puts, buy the March 6, 225 puts, and do this spread for a 50-cent credit. So that is spread number 2 that we're going to be trying to get done. I think the chip demand for NVIDIA is going to continue to be very, very high. So many different applications that they're using their chips for. So I like it. SPOT, S-P-O-T. Well, what's the big deal with this one? Well, Spotify. Are people going to stop listening to digital music because there's a coronavirus? No, probably the opposite. They'll probably end up plugging in. And you can see how the stock really held up well this week. Didn't do anything. It just kind of sat there. So it's right on these major moving averages. Could it break below those major moving averages if we test the 200-day moving average on the S&P 500? Oh yeah, I bet it could. Well, we're not going to go right below this. We're going to try and work right there where that opening gap higher was and see if we can get filled on it. Again, this spread is only going to last a week, so we don't have to get through a lot of time on it. And I'm going to bring up the option chain. Going to go into March 6th. And we'll click on that 130 put, and we're going to click on the 129 put. So we got $1 between the strike prices, and we can see off screen here, nothing. Don't have a bid ask spread because it's no bid offered at 30 cents. Pretty wide market on that one. So realistically, that spread's probably trading for a dime. I don't think it's trading for the middle, which would be 15 cents. But on a market pullback, we should be able to get 20 cents for that spread. And I like it. With only a week and 2 days left till expiration on that 130 price level right down in there, a 10-point move in the stock, which has moved about 7 points so far this week. So let's put that into perspective. It's moved 7 points this week on a 300-point S&P drop. We're not looking for a 300-point S&P drop. We're not even looking for a 100-point S&P drop. We're looking for stuff to just get crazy whacked out with a drop below the major moving average and then to jump right back. So there are buyers on this stock. It's kind of a cash machine because they've got a recurring revenue stream for digital music. Okay, should not have any kind of supply disruptions or anything related to coronavirus. People are still going to listen to music even if coronavirus spreads. So this should be a decent play. And we've only got a week and 2 days. So we're just trying to take advantage of a temporary pullback, get in, try and get our credit done, move on. So final pick, Twitter. Well, what's Twitter done? So Twitter had this big sell-off right here, but it has been a steady grinder. It got into this gap. We've been selling put spreads here, here, here. I mean, put spreads all the way up, the breakout. Been a fantastic play for us. So we get this big breakout here. In fact, we like that relative strength. After the earnings announcement, it pulled back in here. And right here, we sold another bullish put spread that expired a week ago. That was a beautiful play for us. The stock has held up really quite well. And it's just coming down to check this breakout. So if we get a big drop, I would like to sell below this 100-day moving average. We've also got this upward sloping trend line, which will also provide us with some support. So I can click on that just so that you've got a little visual on that. We'll click there. We'll click there. You can see how that intersects right at the 100-day moving average. So that $33 strike price is what we want to leverage off of. So we're going to click on the option chain and we're going to look at the March 6th $33 puts. And click on that. And we'll click on the ask of the 3250 puts. Well, you can see off screen 9 cents bid offered at 13 cents with a 50-cent bid ask spread on it. Well, that already kind of meets my criteria for a bullish put spread because I've got that 25% return if we can get that spread off. I'd like to get a little bit more for it. So in this particular case, if the market is coming in tomorrow, I'd like to try and get 20 cents for it. I think it's realistic. The stock doesn't have to go down too far. You can see here that it has had a pretty good drop from $39 down to $34. So it could go down. Now that's on a 300-point S&P drop. On a 100-point S&P drop, it probably could go down about, let's say, $2 max, which puts us kind of right at that $33 level. So I would say let's hold off for more. We're going to try and get 20 cents for this. If we can't get it done, we won't get it done. Let's repeat that. We're going to sell the Twitter March 6th, $33 put. We're going to buy the March 6th, $32.50 put, and we're going to do that for a 20-cent credit. Are people going to stop using Twitter because of coronavirus? No, they'll probably use it more to communicate with each other. So I don't see this company having any real big negative impact from the coronavirus at all. So that's why I like it. Those are the types of plays that I was looking for this week. I think these are 4 solid picks. In every instance, the market is going to have to cooperate with us to get filled. Maybe we get filled on one. Maybe we get filled on two. I don't think we'll get filled on all of them. Even if we do, I know we're going to be in at really, really good prices, and we would have to see a calamity. We'd have to see that 200-day moving average tested Thursday or Friday. And we can expect a little bit of weakness into Friday because the market has been weak on Fridays. And then Mondays have tended to rebound and bounce once the news is digested and the market takes a deep breath and rallies back. So if we don't get into these spreads Thursday or Friday, cancel the order on Friday. Do not re-enter it after that. So that's an important point. I've said it enough. I'm not going to beat a dead horse. Let's take a look at a couple of other trades that I think are setting up well. These are not going to be recommendations on the list here. So, but I do want to look at them because I think they set up pretty well. So I'm going to go into the February 26th and I'm going to take a look at the interesting, that's how I labeled it, BABA. I like BABA and I like this 100-day moving average right in here. So we're right at that $200 strike price. And you can see that the stock did pull back a little bit this week, but look what it did the last 3 days when the market was down so much. Boom, boom, boom. It doesn't care. This is an e-commerce site, so and China has already been hit by the virus, so the damage is kind of done. Everything's been priced in as far as uh, people selling stocks and worrying in China. So they've already taken the brunt of the blow, and this stock has actually been able to hold up pretty well. I kind of like that, selling at that $200 strike price, but I don't like it enough to put it on the list, and it could easily drop down. So that's one to watch, though. If we get that big sell-off and you see this continued relative strength, yeah, I think you got to keep an eye on it, maybe consider it. Day traders especially, I think, should keep an eye on it. Gilead, beautiful breakout here, beautiful breakout here. They're working on a coronavirus vaccine, so I think this stock is pretty hot. It could continue to go higher. Didn't make the list because it has horrible option liquidity. super wide bid-ask spreads, and I mean wide, like nickel bid offered at $1.73, crazy wide. So nice day trading stock though. Buy the stock. I think it does really well. Netflix, incredibly strong. And this actually goes to the theme that I've been using this week. Are people going to stop watching movies if coronavirus hits? No, absolutely not. Does Netflix have a lot of outstanding debt? No. Do they have a lot of fixed overhead? No, not really. Not a lot of payroll, not a lot of plant and equipment to support. No. Would people watch more movies if they stayed inside? Yeah, probably. I think Netflix would probably do very good during a coronavirus outbreak, and you can see how the stock has actually moved higher. Now, it is fairly highly valued, and it has not pulled back at all. The reason I didn't want to do a bullish put spread on this is because you never know. Sometimes people start looking at their portfolio and they go, I got to unload something. What am I going to sell now? Everything else is down so much. No, I don't want to get rid of that. I don't want to get rid of that. I don't want to get rid of that. Hey, Netflix is still up. I'll sell some of that. And then all of a sudden, out of nowhere, you start to see selling in it. I don't want to be subjected to that. And I couldn't get any decent premiums because the stock is held up. So it didn't make the list for that reason, but I would day trade it. And I am looking to get long this intraday if we get a nice market bounce. So I wanted to put it on the list. SPCE. Look at this rocket ship. Boy, really held up well even after earnings yesterday. They lost money and the stock was able to tread water today, but I think there are some cracks in the dam. So they're hemorrhaging money. Eventually, this company will be profitable because if not, this would have already pulled back very hard, very quickly during a 300-point S&P drop. So there is longer-term interest in the stock, but I believe that you're going to see some fluff come out of this, some profit taking. So I was looking at this for a bearish call spread, and I actually tried to get one off today just before the close. They wouldn't fill me on it though. So I was looking to sell the February 32 is the opening price today, and then we'll take a look at the chart and we'll call it a night. I was looking to sell the 32, 32.50 bearish call spread, and I was trying to get 20 cents for that. So was not able to get it done. It was no bid offered at 25, but uh, the stock actually looked pretty weak to me. So let's go into that chart. Didn't get filled on it. I do like it on the short side, and I think there's going to be an opportunity to sell some out of the money bearish call spreads on it in the next day or two, especially with the market starting to drag. And here you can see the stock after earnings really rallies up pretty nice. Everything looks good. And then it breaks down. Now, this was not market related. It just cracked. Once it took out that low of the day, had a lot of relative weakness. And I've kind of been waiting for signs of that. And then it'll make a decent short. So intraday, I'll be looking to short it. You can see the orange line below zero. That is an indication that there is relative weakness in the stock. And after a parabolic run like that and a 300-point drop in the S&P 500, I think you're going to see some selling in SPCE. So I am looking to trade it on the short side. So that's the video for this week. I'm going to put that SPY chart up one more time. What a week. Holy cow. Really, really nasty, hard selling this week. There are a lot of people who are probably wringing their hands. We're safely on the sidelines. I'm happy to say, we took a little bit of a ding, but our VXX should have more than offset those losses. If by chance it didn't, don't fret. We've had such a dang good run for over 5 months. And the next good thing is that when you can dodge a big bullet like that, man, oh man, are we going to have a great opportunity coming up? I don't know if it's going to be in a week. I don't know if it's going to be in 3 weeks. We'll see when it happens. And the pattern that I'll be looking for is a really big intraday drop down to that 200-day moving average and a long tail underbody, hopefully a little green body on top. That would be a bullish hammer, and that to me would signify a capitulation low, and then we might have some really nice trading back up and then bounce, maybe keep going down. I see us setting a big time low and bouncing while the coronavirus news is digested and then maybe a little bit of a retracement, a higher low, and then off of that higher low, then I think we could really, really sink our teeth into a nice move. Now, again, I don't know if it's going to mutate. Excuse me. I don't know if the virus is going to mutate. I don't know if there's going to be a credit crisis because of it. There's still so much uncertainty. This is a time to really play it safe. The only reason we're doing some bullish call spreads is because I picked out the best stocks for us to do that on. I'm expecting one more wave of selling down and then a bounce. We've only got these on for a week and 2 days. So I think that we're going to be in nice shape. Whatever size you were using prior to this week, use half of that size for these spreads. Be prudent. Save your money. Don't put it into a high risk situation right now. Let's get some clarity on all this, and then we'll know what to do in the next 2 or 3 weeks. And then when that dust settles, I'll let you know when it's time to ramp up and swing for the fence, because for the first time in a while, we're probably going to be buying calls. It won't be on the first bounce, but on that second bounce, we'll be doing some call buying for the first time in a long time. So thank you. If you're a YouTube subscriber and you're watching this, you're seeing it probably on Saturday. I release this to my members Wednesday night so they can act on it Thursday. Please go back and check the performance for each one of these trades. Give it a thumbs up if you like the content. Please subscribe to the YouTube channel and turn on your notifications so you never miss a video. We'll see you soon, everybody. Good luck. Deep breath. Remain calm. We're in the driver's seat. We may not get any trades off this week, and that's okay. Bye now.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.